And so let's do a quick little market overview. What I've got up here, and everyone at home can see my screen. I've just got Yahoo Finance, but Daryl does not. I can't sort of effectively share my screen over this. So what I'm going to do is just kind of speak through it, and I'm going to open up the All Country World Index, and just to look at the chart, we can just look at it over the last 6 months, and it's quite remarkable. To see the crash happen and then an immediate bounce back, and then we have just been in this very slow, steady, I wouldn't even call it like an escalator up. I think it's like a treadmill that's just like angled up a little bit. But when you look at it over, really since the sort of the initial crash and then the rebound, it really has been this slow and steady increase. And I think that, you and I, Daryl, I think we've talked about this sort of over the course of this period. And I think we both tend to be very, very cautious. And I think that right now, my assessment of the situation is that whereas before, I was kind of talking about this idea of the bulls versus the bears, that, sort of the people, the optimists versus the pessimists, and that really there was a bit of a stalemate for a little while. I would say that at least now, like this week, over last week, the bulls have won, the optimists have won. And I would caution that really listening to experts and people that really are for that bull case of like, let's open up the economy, let's everything's back to COVID, whatever, mission accomplished, we're through it, wasn't a big deal. That I'm worried that it's kind of turned from optimism into hubris, like into just this sort of blind faith that everything's going to get better and that it's not as bad as it was, and that almost sort of maybe a little bit of gaslighting being done, and where really it's just there is still such a disconnect between the performance of the stock market and performance of the real economy. What's your take on that? What's your sense of where the emotions are right now?
They're in transition. I think they have gone from a place where I think people were buying based on the understanding that things were getting less bad. The terrible economic forecast was being taken off the table. That sounds kind of crazy to think that where we're at right now isn't terrible. But there was a certain point in time where investors were thinking that we would be in total lockdown for a couple of years. If you recall, when some of the first job prints started coming out of the U.S., I think it was minus 8 million. You actually had a fairly robust rally because people were thinking that it was going to be worse than that. Right. So we've transitioned from optimism around there being less bad to a situation where it's we're not really sure. And now there is excitement around the reopening of the economy, which I think is going to continue to support stock prices in the near term. I think that disconnect between what we're seeing on the employment side and what's happening in the market, part of that being explained away by central bank actions that have kind of helped support the economy in the near term. I think longer term, I think that's where you and I definitely are kind of sniffing around and really not sure kind of how things are going to go. But I think from an investment standpoint, what people are transitioning into right now is this belief that, and there's real buying out there, that the economy is going to reopen. We are going to have a restart. There's going to be some kind of spending and snapback. So, that's what I think's pushing the market forward now.
Totally. And I mean, we're seeing it in funny ways. One thing I saw this week was Royal Bank. A lot of the banks reported earnings. And, this was a good week for the banks. Like, I'm just showing the chart up here, but, Tuesday jump up, Wednesday jump up, really sort of held those gains throughout. That the banks had been sort of battered throughout all of this. And even though they, here it is, they set aside these record provisions for what the headline here from Bloomberg is Royal Bank BMO set aside record provisions for soured loans. So these are loan provisions. This is money that they're saying is that loans are going to be wiped off their books. So the Royal Bank comes out and says that $2.83 billion is just like, they're just writing that off their balance sheets. And the stock has one of the best weeks it's had in a while. You know, it's this idea that maybe things aren't going to be as bad as we thought they were.
Yeah.
And that does seem to be sort of the dominant emotion right now. And, you know, I think it's just a really good time to be cautious for me, because I do talk about this broader dichotomy between greed and fear, and how I sort of like to be the opposite. That when people are greedy, I like to be cautious. And then when people are afraid, that's when I like to be a little more aggressive. So when we saw the big crash happen, right? Before that, you know, everyone was greedy, right? Like the good times were rolling. And that's when I think, you know, bonds were really important. And, you know, if we didn't have enough bonds in our portfolio, that's when the crash hit us harder than, you know, it would have otherwise.
Yeah.
And that when everyone else was afraid, I mean, looking back, if we had the crystal ball, if we had the time machine, that would have been a great time to buy. You know, a lot of my favorite stocks were down, you know, substantially at that time. And then it did bounce back. I mean, good luck trying to time the bottom, of course. But, you know, at one point we did sense that things were overblown, that fear was ruling the day. And that would have been the time to get greedy. And then now that things have come back up a little bit, you know, I'm coming back to a place again of cautiousness, that I do see this confidence and frankly, this greed in the marketplace right now, which is why I do think it is a good time to rebalance. I hear you that there might be, you know, support over the next, you know, probably 3 months or so. You know, but my understanding is that when, you know, really it's these mortgages and a lot of these debt programs, there was sort of this 6-month grace period. And if we think like March, and then what is it, you know, April, May, June, July, August, September, that really mid-September is when a lot of these things are going to be coming due. Now, there's a lot of time between now and then. And certainly if we get a vaccine, or if we get more good news, or if we get more supports, then it might be easy for them to, you know, then kick the can another 6 months down the road, which could extend it. But the sense that I get is that the real impacts of this crisis, in terms of the unemployment and in terms of bankruptcies and in terms of, you know, the impact on people's lives, that we're not going to see that for a little while. That is a bit of a lagging effect. So, you know, who knows? And certainly we could see the stock market continue to rise. But I think that is why I wanted to really have you on this week to talk about bonds, that I think for regular investors, this is a good time to be able to do that rebalancing, make sure that your bond levels are at an appropriate level, which then really sort of, you know, begs the question, you know, should our bonds still, the option, is this still the way to do it? Do all the old rules that we had before the crisis, do they still apply right now? So that's what we're going to get into. Thank you. Someone just joined. Miss Don't Try This at Home says, I'm late, but I'm here. So welcome to the stream. So happy to have you join us. So before, I just want to touch on 2 quick things for my market overview. These are just things I tend to show every week. So the first thing is the VIX, the Volatility Index, to get a sense of how volatile markets are right now. We can see that it has continued this sort of downward trend, that, you know, we are seeing less volatility. I mean, today the Toronto Stock Exchange was down 0.06%, which is about as flat as you can get, which makes me very happy on the volatility side. So that makes me happy. And then I do like keeping a quick look on the oil price. So for WTI, West Texas Intermediate, you know, it has bounced back from the lows. We're looking at about $33 a barrel. So, you know, really there was, you know, that weird crash that we saw with the ETF, and where I had that video, you know, WTF happened to oil prices. You know, that hasn't been repeated. The futures market didn't collapse once again this year, and or this month rather, and that once again, you know, oil has come back up, as is Western Canadian Select, which is the Alberta oil, which, you know, I gotta say, obviously, you know, I don't have a lot of sort of sympathy for the CEOs and the investors in the oil sands, but certainly a lot of employees there, a lot of companies, small businesses that I know depend on that sector. So, you know, they're gonna be a little bit happy just to see that the price isn't, you know, at the $5 a barrel where it was for a little while, that it has come up to about $26 a barrel, which does speak to the, you know, this idea, this optimism that it's going to be, the economy is going to be opening back up. That, you know, maybe the airlines, whereas before, that, you know, it was down 90%, maybe now it's only down, you know, 50%. That, you know, things do seem to be improving Although, I think that there's understanding, speaking to a lot of medical experts, that, there is reason for caution still on the biological side of things. Anything you want to add there, Daryl, or does that feel pretty good?
No, I mean, I think we both kind of have been looking at, kind of the economy, the real economy in tandem with how markets are doing. And I think for both of us, even coming into this crisis, I think the key thing that we've been communicating to people and that we've always kept in mind is the importance of rebalancing your portfolio, which is something that has always kind of worked. Of the investment rules that are out there, there are very few that you can kind of say time and time and again through numerous different phases of the economy, of the economic cycle that work. That is one of them. So, we did see people kind of coming into the crisis that they were a little bit too hot in terms of their allocations, too much equity, not enough bonds in their portfolio. The crisis kind of effectively rebalanced their portfolio for them because those equities start to fall off. So it's something that is always important. It's always something that I recommend for clients when they're looking at their portfolios, and it's going to continue to be forward,
Totally.
irrespective of what the outlook is at the moment. It's always important to just keep that in mind, and it's something that each person has to understand for their own personal risk tolerance.
Absolutely. My mantra throughout the entire crisis was keep calm and rebalance. And, I
Yeah,
think that
yeah.
applies in times of fear as well as in times of greed. That really, and I would say we're starting to touch on that greed a little bit more.